Let's welcome in our morning guest now. Avinash Gorashkar is now with me. Manas Jaiswal is with me, and Shrikant Chouhan will also join us in just a bit. Avinash, before we go to your picks, you think ICICI will be an important number? What to watch out for when the management starts to speak?
No, I think Pankaj, clearly, this quarter's asset quality number and the management commentary, I think, are going to be very crucially watched by the markets. Our sense is that ICICI Bank, the absolute profit number in this quarter may not be important, but what kind of provisioning goes for the Jaiprakash Associates account, because, as per the RBI norm which came in recently, I think they would have to provide for this incrementally. So, this quarter's asset quality and going forward, what is the kind of outlook for the loan book growth, especially the retail loan book and the corporate loan book growth would be very key factors to watch. And obviously, what are the gross slippages, what kind of asset quality levels does the management intend to maintain in the year FY18. I think these are things which the markets would closely watch. Any positive surprise here, any improvement here would obviously result in the stock price showing a good bounce, because expectations are that possibly most of the provisioning has already been provided, and going forward the asset quality is definitely going to remain stable. Right,
but do you think that chances of a positive surprise are much more than negative, or already the street has built in a lot of negative that could come in?
No, I think chances of a positive surprise are much better, because if you see even Axis Bank numbers, the street expected a very bad sequential as well as a YOI kind of drop. The same thing could be applicable to ICICI Bank. I mean, despite the fact that they would have to provide for the Jaiprakash Associate account, I would believe that a small positive surprise could be expected in today's numbers. And clearly what the management says clearly for the year ahead, especially on the loan book growth and the asset quality, would be crucial kind of key points to watch out. I mean, any surprise here or any upbeat commentary here from the management would definitely be positive for the stock going forward.
Right. What are your picks, Avinash?
The first pick is an agro company called Gujarat Ambuja Exports. It's mainly into maize and starch processing, Pankaj, largely into derivatives and specialty kind of chemicals. In fact, the company posted a top line of roughly 2,700 crores last year and a bottom line of 100 crores. The traction for the year FY17 has been very strong. Top line in the first 9 months is up by almost 30% and the bottom line is already 125 crores. Our sense is that this year the company could show a very strong 60 to 70% kind of earnings growth. The company concluded a buyback also in December 2016 at a price of 95. So equity has now come down from 27 to 22 crores. So we believe that over the next 12 months, looking at even FY18 prospects, one could look at a target price of around 190. The second company is a small steel company called Rama Steel Tubes. We believe that this is a company which basically has a very strong hold in the galvanized as well as the ERW pipes, which find applications in water, sewage and the oil and gas transmission space. They have a very healthy order book, and our sense is that here also the kind of top line and the profitability numbers for the year FY17 could see a 60 to 70% kind of top line and bottom line growth. Again, in terms of return on equity, the company has posted a return of equity of almost 22%. And we believe these numbers could get better. So our sense is that earnings, which could be about 7 rupees for FY17, could easily double over the next 2 years, and therefore we have a target price of roughly about 180, 190 here. And finally, from the housing finance space, as you mentioned, Diwan Housing will be posting numbers. We had earlier given the call earlier, but our sense is that even from the current levels, if one were to take a slightly medium-term call, looking at the kind of fourth quarter numbers and the tag of affordable housing, which actually will benefit the company significantly, we could look at a target price of 500 over the next 12 to 15 months.
Right. Shrikant Chouhan is also now joining us. Shrikant, what are your picks?
Good morning, Pankaj. We feel that the market is going to remain in a range, and that's why we are focusing on those stocks which are not part of index, but at the same time which are very close to their important support. Very first, we just want to go long on GSFC, which is currently around 125, 126 levels. The stock is forming a breakout kind of formation on monthly basis. It is heading for 140, 145 plus kind of level in next few weeks of time. That's our view. With the same view, we can take long call on GSFC with a stop loss at 120, 121 on the downside. We also like Hindustan Unilever, which is around 925, 930 levels. There, if we see on monthly basis, the stock is forming ascending triangle kind of formation, which is positive. At the same time, on daily basis, the stock is very close to its support area. So from here, with a stop loss at close to 915, we can take long positions on Hindustan Unilever with a price target of close to 970. But we feel that it is heading for 1000 plus kind of level in next couple of weeks. We also like MFSL, which is around 650-55 levels. There also the formation is bullish. On daily basis, the stock has formed some flag kind of formation, which is a continuation formation. The stock was into this range since last almost 15 days. So from here, we are expecting stock is heading for the next level of 670, 690. So here also the risk reward ratio is highly favorable with a stop loss at 645. Take long positions on MFSL, target of 670.
All right, so those are Shrikant's picks. Good morning, Manas. What are your top picks?
Good morning, Anisha. 3 buy recommendations. First is Arvind Industries because after 3 days correction, stock bounced back sharply from lower levels with great volumes. And now definitely stock has some resistance near to 410, 412. But looking at the pattern, I think it can break this resistance this time, and possibility is high that stock can test 420. So here one can take a long call, keep the stop loss below 404. Second call is a buy call on Apollo Tyres because most of the tire stocks are still looking strong on the charts. Apollo Tyres is making higher tops and higher bottoms, and yesterday it broke the resistance of 248 with decent volumes. So I am expecting further up move in Apollo Tyres. Stock can test 260. So here one can take a long, keep the stop loss below 245. And last one is a buy call on Engineers India. The trend is positive because stock is making higher tops and higher bottoms, and after 4 days correction, stock took support near to 165 yesterday. It bounced back sharply with decent volumes, and the overall trend is positive. So I'm expecting a breakout above 174 soon, and possibility is high that stock can test 176. So here one can take a long call, keep the stop loss below 167.50.
All right, 3 buy calls coming in from Manas. Quick check of how the currency is doing. It's flat at this point in time, but we are watching it because a day earlier it did breach even 64 to a dollar. We'll watch how the currency does. We'll also focus on earnings. Pankaj flagged off important earnings that are due today, but in those that came out, Marico's earnings are very impressive. After Dabur, there were some concerns about what will be the impact on FMCG companies, but Marico has done well. We saw sales growth at 2% coming in, but the bottom line growth is very impressive. Profits up 25%. The EBITDA margin was also higher at 19.2% versus 16.3% on a year-on-year basis. Marico managed its bottom line well. It cut back on ad spends post demonetization, though promotional spending remained high. The India business volumes were up 10%. Parachute volume growth came in at about 15%. The international business suffered actually. It saw a decline of 8.4%, mainly due to the problems being faced in the Middle East. But domestically, the performance, especially with Parachute, looking very strong.
Right. RBL Bank also declared numbers. We'll be talking to the management very soon. Strong set of numbers. NII came in at 352 crores. Profitability came in at 130 crores. It beat all street estimates, 54% growth for the profit number. NIMs came in at 3.5 versus 3.2. This is, of course, a comparison that we are doing on a YOY basis, 30 basis point increase. Loan growth was up 39%. Again, it's a YOY number, and deposits were up 42%. NPL, that's the non-performing assets, came in at 1.2% versus 1.06. This, of course, is a QOQ number. Absolute gross NPAs were up close to 24%, and provisioning in the quarter was slightly higher than estimates. But still, the growth was pretty strong, and that's probably the reason why markets have still liked this numbers. RBL Bank, the performance has been strong so far. It continues to be strong. However, slight bit of slippages as far as asset quality is concerned.
There were, of course, other earnings that also came through. So let's quickly take you through them. Shriram City Union Finance came out with its 4th quarter earnings. Profits coming in at just 12 crores versus 55.5 crore rupees, a drop of 78%. Interest income higher by 14%. There was a big jump in its provisioning as well as write-offs, and that really impacted the bottom line. Provisioning coming in at 411 crores, nearly double of what they did in the previous quarter. Inox Leisure had a steady set of earnings, so profits are lower, coming in at just 20 lakhs when it's a 100% drop coming in their profits. Top line grew about 14%. EBITDA margin came in at 8.2% versus 5.8%. So on the margin front, they outperformed. They had a tax credit of 3 crores versus a credit of 26.2 crore rupees in the previous year. So that also impacted the bottom line. TCI Finance came out with its earnings, profits coming in at 40 lakh rupees versus 10 lakh rupees. We had total income was flat at about 2.7 crore rupees. So that is TCI Finance for you.
Right. IRB Infrastructure, the much awaited infrastructure Investec or infrastructure leasing products are now in the market, or they've opened in the market. So issue opened today. Today it closes on May 5th, so the next 2 days it will be open. It will be listing on both NSE and BSE. The price band is between 100 to 102 rupees a share. It's a big offer size. It's about 5,000 crores, so it's about $800-900 million. It's not a small amount by any means. IRB has raised overnight 2,000 crores. This is from anchor investor, and there were various anchor investors into this particular company. IRB has 6 operational roach projects into various states, which are included into this. So that's what they are offering into this product. What does this essentially mean? So firstly, this is the first investment related product in the Indian market. IRB Investec or INB Trust would have an EV of 5,924 crores. What it offers is post-tax IRR returns, or post-tax returns of about about 12.4 to about 12.5. So that's the number that they offer. What is an Investec? It allows individual to invest into infrastructure projects. Investecs are debt instruments traded on exchanges. They enable promoters to raise funds for long-term projects. Trust will offer interest on the funds that have been invested. So that's what this particular product offers. It's the first of its kind, and that's why it is expected to see a lot of interest in the market.
But Pankaj, is this an investment that retail investors can look into? Because I think it's catered more to the institutional HNI clients, because I think the minimum investment required here is 10 lakh rupees, right?
Right, Anisha, the minimum investment size is 10 lakh rupees. Some like Sterlite Power, which are also likely to come out with such products, are directly going to the institution. So there may not be any offering. It's a HNI product. It's about 10 lakh plus is what investors can actually, that's the minimum ticket size, if one has to say, into this particular offering.
All right. Thanks for that clarification, Pankaj. Let's talk about a few other stocks that are in focus today. Let's start with Tata Motors. Let's start with stocks that are going ex-dividend today. We have Crystal giving a dividend of 6 rupees a share, and ITD Cementation giving a dividend of 30 paisa a share. Then we have Tata Motors because of JLR sales data coming in from the US. US retail sales were up 34.5% at 8,441 units versus 6,275 units. We've got Jaguar US sales up 197%, a big jump coming in. So good performance in the US. Land Rover sales were up, actually just flat at 5,200 units. Given that auto sales in April in the US have not been very good, for Tata Motors this has been a great performance. TVS Motors came out with its April sales. Sales were up 8.4% at 246 lakh units. Exports were up 42%, so very good performance coming in there on the export side. Now, Ujjivan Financial is in focus. Kemne Investment Fund has sold about 10 lakh shares at 361.68 rupees a share. Then some of the movie stocks, movie exhibition stocks will be in focus because the Karnataka government has passed an order to cap movie ticket prices at 200 rupees. And this order on movie ticket price, the cap will be effective from today. So we will, keep a focus on the movie exhibition stocks. Then we have Spark. This is the Sun Pharma Advanced Research Company. It's going to consider some fundraising on May 5th. And this could be, but the fundraising could be via equity issue, or it could be warrants or on a preferential basis. Then we have Dalmia Bharat. There are some reports coming in that the Chhattisgarh government has completed the auction of the Kelsa 2 block, and Dalmia Bharat has emerged as a preferred bidder for the Kelsa 2 block. So this is another stock that we'll be watching out for.
Right. So 40 seconds for markets to open. Shrikant, just a quick view on ICICI Bank.
Pankaj, I think, all these private banks did extremely well after an announcement of the result, and here also we are of the view that the stock is going to do well. Yes, let the announcement come, let the result come. But the way the stock is spend time between the range of 260 and 285, we are of the view that in case if we see any weak opening in tomorrow's date, then definitely we can look for adding the stock to the portfolio, because finally we are projecting that the stock is heading for 320 kind of levels in next couple of weeks or months.
Right, so we'll wait and watch as to what happens to ICICI. Numbers come out today. We'll also do the preview shortly once the market opening is behind. That's the opening bell for you. 63 points higher for the Sensex and close to 30 points higher for the Nifty. So I think it's going closer towards that first resistance. Bank of Baroda on your screen is up 1 rupee or so. SBI 289. Axis Bank 2 rupees higher, and ONGC also on the positive side. Tata Steel 3 rupees higher, 448 for Tata Steel. ITC absolutely flat. IOC absolutely flat, and Tata Power really no change. Aurobindo Pharma was among the top losers yesterday. It's about 4 rupees higher right now. Marico is a stock which is reacting to its earning, 1.7% higher, 325 for Marico, 6 rupees higher for this name right from the word go. RBL Bank is down 6 rupees. It was a strong set of numbers, but one would say that there is a little bit of slippage concerns on this company, but not much, though. It's still less than about 1.2, 1.3 odd percent. Shriram City Union Finance down about 4%. It's a less traded or a very illiquid counter, so it's down about 100 rupees based on numbers. Inox may not be reacting to numbers so much, but the news that Anisha pointed out about capping ticket prices into the state of Karnataka, it may not be one of the biggest states that they operate in, but definitely it's a concern going ahead what happens to these prices. JM Financial 122, 123 numbers were strong on a YOY basis, 5% higher for JM Financial, 122, 123 for this name. TCI Finance is down 3%, 8,000 shares in terms of volume, so not much that one can read into this at this point of time, but of course it's reacting to numbers. Let's look at Tata Motors as well. So that's a company which declared numbers or which declared the monthly numbers for JLR in US. Good set of numbers, 4 rupees higher right now, 455 for Tata Motors. Let's also look at what's happening with TVS. Remember, it's a stock which people like. 503, 8% growth as far as numbers are concerned. So it's slightly on the higher side, about 8 rupees on the higher side. Ujjivan Financial Services, it was in focus yesterday. There was a big block deal over there. You got some seller's name, and it was into results week last week. So it was reacting to that. It's absolutely flat right now. Spark is flat, 1.5% higher. No major movement on Spark as well. 324, 325. Let's look at Dalmia Bharat. There is a news flow over there. What's happening to that name? It's up 1%, 5,000 shares traded, 22 rupees higher for Dalmia Bharat. So that's not exactly a big volume counter, but doing decently well. Anisha, any other names that you can pick up?
On the volumes front, there are a few names that have moved up well. Subex is up 4% today, and JM Financial is also up 4%. SREI Infrastructure Finance is up 2%. Dewan Housing Finance is up 1.5%. Even IRB is up 1.5%. We of course have that Investec opening up today. Karnataka Bank and Bank of India are each up about 1%. On the losing end, we are now seeing HDIL down about 1%. Federal Bank is seeing some profit taking, and Indiabulls Housing Finance, we saw a stellar move a day earlier, is seeing some amount of profit taking. And of course, you pointed out the RBL. Wanted to come to you, Avinash, on some of these tech names. The heavyweight technology names like Infosys, TCS, they're not doing much. But if you look at the mid-cap tech names, a Hexaware or even an IT Tech, they're doing very well. What explains this? Why would you think, what explains this kind of outperformance in the mid-cap IT names?
No, I think clearly in terms of size, Anisha, I think the big players like TCS or Infosys have reached a base where incremental growth is going to be very difficult. And looking at the kind of challenging headwinds, especially from the US markets, our sense is that, smaller companies like Mastek or for that reason Persistent, these are companies which are yet, not very large in terms of top line, in terms of profitability. And therefore, the overall base effect seems to be playing out. Plus, their overheads are well managed. That is why their EBITDA margin should also improve. So, our sense is that, investors should use entry points to get into such mid-cap IT companies where we believe the earnings story and the overall picture for the earnings growth over the next 12 to 18 months looks a lot better than the frontline IT companies. And that's specifically the reason you're seeing a lot of activity in these small IT companies rather than the bigger names like, say, a TCS, Infosys or a Wipro.
All right. Let's pull up the stock of Bajaj Auto for you. It's come out with its sales numbers for April. The total April sales have come in at 3.29 lakh units. And in fact, this is lower than the 3.30 lakh units they did in the same period a year ago. The stock is moving up. Domestic motorcycle sales were down 19%, but the motorcycle exports are up 44%. When it comes to commercial vehicles, again, domestic sales are down about 38%, but exports are up 59%. So there obviously is some kind of impact of the BS4 emission norms. Exports perhaps have been pushed out well, and we're seeing a strong traction coming in there. That stock is up 1.5%. Manas, how do you view Bajaj Auto? What are the levels you're watching out for this stock?
See, Bajaj Auto is facing some resistance near to 2950 levels, but looking at the pattern and better volumes, I think possibility is high that this time it can break 2950 also, and it can go up and test 3020. So if you're a trader, then definitely you can take a long call here. Keep the stop loss below 2900.
Right, Avinash, how would you view Cummins India? There is an upgrade which is coming from Morgan Stanley, which has taken the stock higher. But what is your view on Cummins?
No, I think numbers, Pankaj, which came in yesterday, from the management con call were much better than what the street expected. And our sense is that FY18 will be definitely be a lot better. Our sense is that hopefully, from the second half of FY18, we could see a good amount of volume as well as margin expansion coming in. Apart from the fact that, the domestic market is definitely poised to do well. Our sense is the kind of products also which they are going to launch in the second half would also propel good amount of earnings growth as well as incremental top line. So I think this is definitely a portfolio stock. Maybe it may not move up significantly in the near term, but our sense is that FY18 will be definitely significantly better than FY17, and definitely any decline should be a good opportunity to actually buy this stock and accumulate it.
Right, Shrikant, what would be your call on Cummins?
See, Pankaj, this stock has formed a classic double bottom kind of formation on monthly basis. It recovered very well, and it is now sustaining well above the mark of 950, which was its resistance level or breakout level. So while looking at its overall formation, I am of the view that it is safely heading for the levels of 1150, 1200 kind of levels. So even at current levels, when the stock is up by 4%, we can look for adding the stock to the portfolio as well as trading portfolio, because I am not expecting now the stock to sustain below the mark of 1000. So the risk reward ratio is favorable. We can expect 1200 on the high side. It's a classic buy at current level.
Right. Shrikant, can you just look at Power Grid and tell us 2.8% higher? Do you think it's a name which can do well even from here on?
I think, see, this stock is very similar to the formation of Petronet LNG when the Petronet LNG was close to 170, 180 kind of levels. Here also the formation is exactly similar to the same. There is like a lot amount of consolidation is happening, and that consolidation is into rising channel, so which clearly indicates that there is a steady amount of buying flows in the stock, and stock is finally heading for minimum 250, 255 in next maybe couple of weeks. So it will take time, but certainly at this level the risk reward ratio is favorable, because the stock has spent a lot of time between this 200 and 205 levels. But if we take a view of next 3 to 6 months, then I'm very much sure that this stock is going to cross 300 plus kind of level. So at current levels, it's a very strong bet to buy for.
Right. Godrej Properties, it was up 10% yesterday. It's up 5% right now.
So there also, like we have viewed that the stock has formed some rounding bottom kind of formation. It has broken that level at 440, 450. Now it is middle in the that particular price target, but we are projecting that the stock is finally heading for 650, 660 kind of levels. So even at current levels, if there is a positions, investments, then one can hold on to it, because finally it is heading for 650. But if there is any dip, then only we can look for adding the stock, because right now the risk reward ratio is not favorable. But yes, certainly, if there is a medium to long term view, then just hold on to your positions.
Right. Thank you so much, gentlemen, for taking out time for us. Always good to get a perspective from you. Just before we go, Shrikant, let's start with you. Any disclosures?
Whatever that stock we discussed today that are not in my portfolio, but we recommend our clients. So that's the disclosure.
Right. Avinash, for you?
Yeah, I think all the stocks mentioned, we could have our, clients having positions here. Personally, I don't hold any positions.
Right. Manas, disclosures?
No personal holding in these stocks, but we have recommended these stocks to our clients.
Thank you so much, gentlemen, for taking out time for us. Always good to get a perspective from you.